Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. XRP holders, listen carefully. What you're witnessing on charts is not natural market behavior. These sudden violent crashes are not accidents. They are designed events carried out with precision, and they're meant to do one thing: scare you out of your XRP so someone bigger can buy it cheaper. History repeats itself. In the 1600s, Dutch tulip merchants deliberately spread rumors to crash prices only to scoop up bulbs for pennies. Fast forward to the Great Depression of 1929, Wall Street insiders were accused of painting the tape, orchestrating panic to load up on assets. Today, the same playbook is being used in the crypto, and XRP is ground zero. Crashes don't start with candles, they start with fear. Watch how headlines suddenly line up like dominoes. Global tensions rising, Fed warning on inflation, crypto regulation crackdown. The timing is never random, just like a magician distracting you with one hand while the trick happens in the other. These headlines are the smoke screen. Retail investors connect the dots. They see a scary headline, then a massive red candle, and assume the two are related. But in reality, institutions already plan to sell off in advance. The news is simply the cover story. This is why your gut tells you something doesn't add up. You're right, it doesn't. Here's how the machine works step by step. First, quiet positioning. Institutions quietly stack shorts or prep ETF outflows. Nothing flashy, the water looks calm. Step 2, the spark. Fear headlines drop, the same way propaganda fueled pandemic during wartime. Number 3, the cascade. Selling starts, stop losses trigger, leverage gets liquidated. Within minutes, a few $100 million in selling pressure turns into billions. It's the financial equivalent of yelling fire in a crowded theater. Number 4, the harvest. Prices bottom out. Institutions buy back at bargain levels. Retail's left either broke or sidelined. Think of it like a chess game. Retail plays checkers, reacting to the last move. Institutions play chess, planning 5 moves ahead. And the ETF structure gives them the perfect weapon. When investors redeem ETF shares, BlackRock, Fidelity, or State Street can sit on those assets for up to 21 days before selling. That's a ticking time bomb. They can choose to detonate at the perfect moment, right when they already bet against you. This isn't theory. Let's talk numbers. Bitcoin ETFs saw $1.2 billion in outflows earlier this year. Result, Bitcoin dropped 10% overnight. Ethereum ETFs recorded $500 million in redemptions. Within days, Ethereum fell 12%. XRP, with its small liquidity pool, is even more easier to move. A few $100 million in institutional selling can send ripples that feel like tsunamis. This is the same trick JP Morgan was accused of in the silver markets decades ago. Suppressing prices with orchestrated selling, then reaccumulating. Markets change, but human behavior doesn't. Now here's the part retail almost never sees: the rebound. Every engineered crash is followed by a violent recovery. It's clockwork. A steep dump, then a sharp snapback. Why? Because institutions don't just profit from the downside, they profit from both directions. Think of it like farmers burning fields. It looks destructive, but it's intentional. The ashes clear the soil for fresh crops. These crashes clear the order books, then the rebound feeds the next rally. If you understand the rhyme, you stop panicking and start positioning. Instead of being the hunted, you become the hunter. Why XRP? 2 reasons: liquidity and leverage. XRP trades in tighter corridors, making it easier to swim with less capital. Institutional interest. Despite the fear campaigns, banks and payment networks still want exposure to XRP's cross-border settlement utility. So while retail is panicking, institutions are quietly building positions. It's the same story as gold in the 1970s. Governments suppress prices while simultaneously hoarding reserves. XRP is playing out its own version of that drama right now. The bottom line is this: engineered crashes are not going away. They've existed for centuries, from tulips to tech stocks to tokens, and XRP is simply the latest battlefield. You have 2 choices: react emotionally, panic sell, and become the liquidity, or study the cycle, recognize the patterns, and ride the rebounds. Because remember, every engineered crash is just a setup for the next rally. The question is, will you be on the losing side of history or the winning side? If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already underway. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.